Finance Minister Nirmala Sitharaman just presented her sixth straight budget, equaling Morarji Desai's record as Finance Minister. It's an interim budget because India heads into an election a few weeks from now. Now, election-bound governments are usually insecure. The interim budget is literally the last chance for them to roll out some goodies before the electorate. Now, when Piyush Goyal, for instance, he presented the interim budget in 2019, his speech was 1 hour and 45 minutes long. It was packed with sops for farmers, the middle class, and an electorate hurt by demonetization. Today, Finance Minister Nirmala Sitharaman spoke for just 57 minutes. Her messaging was confident. Now, clearly, this is a government which expects to be voted back to power in May this year. Prudence and confidence? Joining me to discuss this newfound confidence in the government is my colleague Sridharan, and we are also joined by Saurabh and Karan Mehrishi. Gentlemen, welcome to the News9 Plus show. I want to start by asking you, Sri, you've been tracking the budget from 11 a.m. Confident government, interim budget. How do you read her body language?
So, Sandeep, till this very morning, there was a lot of speculation that given that we're just maybe 10 weeks away from the Lok Sabha election, that this would be a populist budget despite being just a vote on account.
Right.
I think the message from the budget is very loud and clear, Sandeep.
Right.
No one can mistake it.
Yeah.
The Modi guarantee is not about Revadi.
Yes.
It is not about compromising on the fiscal health of the nation and getting people used to entitlements.
Yes.
It's about empowerment, as the finance minister said.
Yeah.
So I think in that sense, what the Modi government has demonstrated and is betting on the fact is that it is possible to get votes, without actually throwing soaps the way of voters. That you can have a very good a budget,
performance-based
which is
government.
Exactly, like GDP, like she said, governance, development, performance.
Yes.
That you can have such a government and still expect people to vote for you.
Right.
So if there's anything that this budget shows, it's the confidence of the BJP government that performance will be rewarded and not just like sops.
Absolutely. Very important point there, Sri. And in fact, Mr. Rai, I want to ask you this point that Sridhar mentioned, that confidence, performance, confidence drawing from that performance of the government. Were you expecting a lot of sops to be thrown at the electorate this year? Or did the budget kind of, was it a bit underwhelming? It's just less than an hour.
Frankly, no. This was an interim budget.
Yeah.
I was not expecting any sops. Rather, I would have been surprised if there were election sops out there. So to that extent, no. In fact, I feel dramatically different. I feel given this is an interim budget, the focus on green, focus on sustainability, focus on certain sectors, etc., are actually pointers to the main budget and are pointers in the right direction, in my opinion.
Right.
That's how I see the budget. It might be underwhelming for some. If I put myself in a different hat of a taxpayer, I would feel that, yes, there might have been some ETC benefits or some more stuff. But frankly, if I look at the economy, if I look at the country, so this budget has been overall, economically speaking, a budget of a very stable government.
Right.
They have not gone for populist measures.
Yes.
Hats off to them.
Right. And Karan, this point, and this is something that Sri as well mentioned, the fact that there's a confident government betting on performance and going before the electorate by saying that, look, this is what we did. It's more like a report card rather than an interim budget. How do you read what the finance minister just put out in Parliament today?
Well, I think it's a lollipop budget at best.
Right.
While my concerns regarding the farm sector slowdown is confirmed, given the increased allocation of around 0.8 lakh crore for MG Narega and renewed focus on rural families, I am still not convinced about the fiscal math here.
Right.
The finance ministry is assuming that they will have a notional saving of around 1.35 lakh crore in interest payment obligations, and they're combining that number with unutilized balances of the current financial year of around 26,000 crores, and merely increasing the capex of by 1.6 lakh crore. Now, this is nothing short of pulling a rabbit out of thin air. It's easier said than done. Raising capex at a time when the government is reducing fiscal deficit by around 50,000 crore and increasing revenue receipts by just 3 lakh crore.
Right.
Is something that I am not able to understand how they are able to achieve that target and how they are able to increase their capex spend for the next financial year. I think the FM is putting too much weight on the shoulders of Governor Powell in the US. I mean, they're assuming that the US Fed will normalize
continue to grow.
Interest rates.
Right.
It will continue to grow and it will normalize interest rates.
Yes.
The US Fed, and that would give Indian yields a respite. And I think the rest of the job they are assuming will be done by a net debt issuance that has sort of not grown at all, remained almost constant, even though the GDP is growing by around 10.5% in nominal terms.
Right.
So I think right from the fiscal math to how they're assuming that capex will rise by reducing fiscal deficit with impunity is something that is absolutely beyond understanding.
Right. Sri, this fact that nominal GDP is projected at just 10.5%, doesn't that kind of impose a lot of restrictions on the government? It reduces your wriggle room, shall we say?
I don't think so, Sandeep. If you look at the context of what is happening around the world, you know, large parts of the world are grappling with slowdown.
Yes.
But coming back to the point that Karan is making on GDP, I think to people who are wondering, I'm not going to dispute the arithmetic behind it, but we have to take the finance minister on face value and trust her numbers. So I think for people who might be wondering, well, there's nothing in me, in it for me in terms of income tax, no SOPs, nothing. I think what they should take solace from is the fact that if the government is going to reduce its borrowings in the market, then we are looking at interest rates actually like coming down, and we might even see interest rate cuts happening later this year after the government comes to power. So that effectively puts money back in the pockets of consumers, whether it is your home loan, car loan, or any other loans that you take. So if you haven't gained by way of, let's say, income tax, you will end up gaining if the interest rates go down, and these could be substantial savings for households, Sandeep.
And see the point about household savings, that's at its lowest in 50 years, they're saying. It's like gone down to just 5.1% this year. How bad is it? I mean, how can it impact the average middle class person?
So I think that is one of the reasons why the economy is not growing faster, because it's like largely public expenditure, like all the infrastructure projects which is driving private sector investment from industries also been it's declining, and private consumption, especially in rural, is a bit soft. So I think those are factors. But if the overall momentum of the economy keeps up and we are able to keep investing in infrastructure projects, I think that will eventually lead to job creation. And you should see the savings go back up at some point. It may not happen in a hurry, but if the economy grows and people are able to earn more, incomes go up, and the per capita goes up, then we'll see some savings also happening.
Right. So how critical, I want to ask Saurabh this question. Saurabh, how critical is this growth of the household savings rate to boost the middle class, in the next couple of years? Because that's one very big area of concern. The last 50 years, it's crashed from 12% to less than 5%. How critical is this?
Well, see, historically, when I was reading economics, we all were told that one of the dividends of India is the extreme savings that we do, that our parents did, that we did. However, looking at philosophies of true consumerism, where India is headed with its middle class and in spite of its demographic dividend, I think spends will be equally important. And to run an engine at the growth that we are aspiring for, 7%, 8%, savings will be a mainstay, but spends will be much more important. So my belief is, yes, their numbers are down, yes, savings need to be improved, but frankly, spends are equally critical and consumers need to go out and spend. Now the question is, where are they spending and does it give a boost to economy? Because that is what saved us from bad days of recent downturn, and that is what is going to spur the growth of the next decade at least. And then of course, while savings are again important for all the government investments, the investment in infrastructure are going to become very critical backbone of India's growth. So coming back to the point, yes, it was important. It belies the traditional theory and the good things that we read.
Yeah.
But personally, I am not sad about the savings rate going down because spendings are increasing, and hopefully that should increase and the market economy will take care of it.
News 9 Plus. Download now.